Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today we're going to look at Nestle. Yes, the Swiss giant, the conglomerate based in Vevey on Lake Geneva. Probably have all seen pictures of Nestle's headquarters, a distinguished building. But we want to look at the stock today, and particularly the shares of Nestle as they're traded in New York as ADRs. But that really is just a translation from the Swiss share. Nestle is one of the great success stories, not just in business, not just in Switzerland, in global stock markets. You've got this chart which shows in the last 15, 20 years, growth from $9, $10 to where it's at today, which is about $75 a share. But that's not the only story that Nestle has to tell. It has many other stories. And I think one of the great stories about Nestle is something like 10 of its brands account for more than $1 billion in revenue. So it's a diverse source of revenue. It's not one product. It's not one drink, one soda, one line of pet food. It's a story with many branches on the tree of success. Now the question is, you're an investor, you say, should I own Nestle? Well, let's take a look at that. The stock, picture of one of its many buildings worldwide. The stock at 75 has one downside, I would say, and which is that it's 17 times earnings. Now, in a robust market and a growing market where you get a history that Nestle has, 17 times earnings, you might say, Matthew, that's a cheap stock and I want to own it. It is a cheap stock for the success that it's had. It's not a cheap stock with someone like me because I feel 17 times earnings is a bit of an expensive lunch or dinner. What else should we look at Nestle, and why else would we want to buy it? Well, the yield is still 3%, and if you look at the Swiss franc, which yields nothing, 3% is itself a success. So while you were waiting for Nestle's shares to come up, go down, we hope go up, you get 3% on your money. How do we want to kind of wrap up Nestle? It has great brands. There's no question that it has great brands. It has great management. Yes, it had some issues with baby food some years ago, but they've addressed those problems, and they've done very well at integrating a number of diverse businesses under the roof of Nestle. So I would say excellent management. They hire from within. They are steady performers. All the things that you should look for in a long-term investment. Trading Nestle, not so much. Buying Nestle today and holding it for the next 5, 10, 20, 30 years, I don't see how you can go wrong. With this caveat, at $75 a share, I find it's a little rich for my blood. At $65 a share, I'm all in. But that's why investing and investments are such a challenge. When's the time to get in? When's the time to get out? There's probably not a bad time to get in with Nestle, but if you can, go in at a little lower than $75 a share. In my case, around $65. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself.